Going on, guys, welcome back to another brand new video. Before we start with the video, if you are new to my channel and this is the first video you're watching, there's a very high chance you're not going to understand a couple of words that I'm going to be saying throughout the video. So please, in the first comment down there in the comment section, the first pinned comment, there's going to be 3 videos on this topic that explain in detail what I'm talking about. So please go ahead and watch those videos first. Come back to this video. It's going to be a bonus with more examples. So hopefully by then you will be able to understand everything that I'm talking about. Also, little disclaimer, I'm not a financial nor an investment advisor. Please do not take this video and all the other videos on my channel as an indication for you to go ahead and invest your money. Online trading world carries a very huge risk. Please make sure you do your own research before setting foot into this world. Now, the first thing we're going to look at is the US 30. Now, it is a potential setup that I'm looking at for a sell. So in my live stream, we analyzed US 30 and I was looking at this picture. Well, not exactly this. My trend line was a little bit different. It was something like this, but still the same thing, same concept. So I was looking at this triangle, which is called the bullish pennant. The bullish pennant is a triangle where the market is in an uptrend and then the market starts making lower highs but higher lows at the same time. So the bullish pennant is basically an indication that the market or the price is going to get squished between this triangle, and then at some point it's going to break out as a bullish trend and skyrocket towards the sky. Right? But now I am looking at this still as a bullish pennant, right? And we had this little breakout over here. Now, why am I looking at this area for potential sells? Well, the market came up here, created equal highs. There was a lot of money for the market to grab over here. So the market grabbed that and reversed in the opposite direction. Now, as soon as the market grabbed this money, this strong bearish reaction came out of the market. So this indicates to me that the market makers might be taking the market down for a while, right? So if the market comes back up here, starts creating equal highs and then does a liquidity grab and comes into this area of interest or area of focus, then I'll be looking for potential sells. So real quick, I thought I'd let you guys know this might be your first video. So if you were able to catch this move, it might make a good impression on you. You might think I'm a genie or I'm a wizard or something, right? So that's good for the channel. Anyways, moving on. The trade we took on gold. Now, very beautiful trade 2 days ago we took. And so let me just go ahead and clear everything out. So I asked you guys on Instagram, what do you guys think what's going to happen over here? So we were over here, right? The weekend had been over. The market just opened up. And I asked you guys, what do you think is going to happen? And I also gave you guys a hint that the gold is repeating a move from the recent past. So I was talking about this. So as you can see, there was a lot of money sitting above here because there were equal highs, and a lot of money sitting beneath these equal lows as well, right? So, and the gold was in a very strong uptrend because of the worldwide pandemic. So if the market was supposed to continue lower, why did we get this bullish reaction right after this strong sell, right? So this indicated to me that the market makers want to take gold higher. Now, we didn't take this trade, neither did I. I don't want to lie to you guys, but if I did, watching those videos, you know that my entry is always at the beginning of a last candle, whether it be a bearish or a bullish candle. And the second entry would be at the right in the middle half of the last candle. So gold was, if we were to take this trade, gold was very generous, coming back twice. So it gave us 2 opportunities to enter this trade, right? But we didn't take this one. So we're not going to talk about it. It's just an example for you guys. However, we did take this trade. Now, since gold was repeating its move from the past, I analyzed or predicted that the market was going to fall down and then continue higher, right? That's exactly what happened. But the problem with taking an entry on the 1 hour time frame, if I was to enter here on the start of the candle, I would be in a loss or a drawdown for about 28 pips, 27, 28, right? Same thing over here. If I was to enter on the start, I would be in a loss for about 21 pips, 22, and the second time I'd be in a loss for about 36 pips or 35, right? So I took, and I don't know where it's gonna reverse from, right? Because this is a very big candle. It can reverse from here, can reverse from here, can reverse from here. So I went down to the 5-minute time frame. This is where I analyzed and took the trade. And I was showing this on my Instagram, step by step, explaining it to you guys. So a couple of y'all were able to take advantage of this move. So I saw that the market closed with a very strong rejection at the bottom with this candle. And right after that candle, this bullish reaction came out of the market. So as soon as I saw this, we were over here. As soon as I saw this move, I went to my Instagram and I told you guys this is going to be my area of focus. And this 1771.920, something like that, I told you guys that this is where I was looking at for potential buys, the start of the last down candle. Now, because I was able to take this on the smaller time frame, look at what happened to my stop loss. So my stop loss was 20 plus pips, right? It became 16 pips or 17 pips. And my take profit, there were actually 3 take profits. But my last take profit was about 100 pips, right? So it was about here, above here somewhere, right? 120 pips, I think. So right here, where the last highest highs were, just beneath that, over here on this resistance, is where my last take profit was. So this is what I'm telling you guys. If the smaller time frames, they help you take a better entry, right? That's why you might see me going down to the lower time frames whenever there's a huge wick or there's a huge candle to take better entries. Okay, so that is the whole idea behind going down to the lower time frames. Nothing else. It's only to get a better entry. That's it. Simple as that. So the market did go for a lot more. It went for like 500 pips. Yeah, 450. But that's not the point. The point is we were able to take advantage of this move. 120 pips is not small. Is not a small amount of pips. Anyways, moving on to GBP odd, I was able to tell you guys last night actually to take this trade right here on GBP odd. So I saw that we were moving within a range since quite a while now, and I saw that the market was creating equal lows over here, and on the RSI we were in the oversold region. So also one more thing, guys, I want to tell you guys how perfect and what gave me the extra confidence that this trade is indeed going to be a profitable one. So I took another confirmation over here. I took out my, let me close the RSI. I took out my Fibonacci, and starting where the bullish push started till here. So I ended the push here, and my entry was lining up with the 61.8 percent of the Fibonacci. But if I were to take it to the real point of reversal, or where the push really ended, it was still lining up with our 78.6 Fibonacci. This was another confirmation. Now the best confirmation that I got on this trade was, let me go ahead and delete this. So before the market came to our entry, it started creating equal lows. And this is what I love the most. The trades that give me an entry like this one are really 100% giving me a confidence, giving me an indication that the market is indeed gonna go into profits. So it created liquidity and did the liquidity grab, and then went into profit. So same thing on GBP odd, same thing. I was looking at the 1 hour time frame, and why was this my potential area of entry? Well, because the market, as I said, came to the area of oversold on RSI, started creating equal lows. There was also divergence. You can see market is creating high lows, I mean. And then the market did this move. The market came down, and then boom, this bullish reaction came out of after the last sell. So this told me that the market indicators, market makers want to take the market to the upside, right? So I was looking at the last candle, and right before the market came down to our area of entry, it created these equal lows from here to here, and then came into our entry. This kind of trade is what I love the most. And this was a 200 pip trade, guys. 200 pip, and the risk to reward is 13 to 1 with only a 15 pip stop loss. With only a 15 pip stop loss. That is what I wanted to tell you guys. That trading this genius money concept, I don't even want to call it smart money concept, because these people are not smart, they're geniuses. Smart, calling them smart is like an insult to them. Smart people are working for them. It is the geniuses that create that trade like this, with this concept, with this idea, with this ideology, right? So the whole reason why I love trading the genius money concept is because it gives you the minimal stop loss with a very high potential take profit. So minimize your stop losses and maximize your take profits is how you're going to be making money in this industry. And also taking partials. Taking partials means close half of your trade in 50 pips profit, 30 pips profit, and then bring your stop loss to your point of entry. So even if the market comes back, your trade will be closed in little loss because of the spreads instead of a 15 pip stop loss, and then let your trade run risk free into profit, right? This is why I love this concept so much. So anyways, moving on to your NZD. Okay, so before we were looking at something different, and I had went through this on my live stream. So we were looking at equal highs right here on your NZD, and we were looking at equal lows right here. And I had predicted that the market would come down to this area before going into profit, or before continuing with a bullish trend, right? So what happened was my entry was actually right here. So my entry was here, and my stop loss, my entry was here, and my stop loss was just beneath this lowest low. Okay, and this was, I was potentially aiming for these equal highs in the long run, right? What happened was market came here, started creating all these equal lows in the region of oversold, and there was divergence, and market went into profit for me for about 70-80 pips, yeah, almost 90 pips. And then I closed my half trade over here at like 50 pips, and then I brought my stop loss to the point of entry. And so the market came back and took us out, right? But we were in profit for a little bit. Now, what I'm looking at right now is that your NZD created all this money over here, did this move, and now we are seeing a bullish reaction. So I'm going to be looking for potential buys if the market gives us a similar entry with creating equal lows probably here, and then doing a liquidity grab move coming into our area of interest, and then continuing higher. So this is what I'm going to be looking for, right? This could be a really nice little setup for about 80-90 pips. Not bad. So I'll be looking at your NZD as well. Now the last example that I want to show you guys, I didn't take this trade, it's just an example. And this is what I'm doing, right? Whenever I'm not trading, I'm going back in the past and I'm back testing, right? And this is what I want you guys to do. So if you come across a new strategy and you think it's really easy for you to understand and you think you can apply it easily, do not start trading with that strategy. No, go to the past, start back testing it. That is the first step. Second is demo. Start practicing on demo. And then the third step is where you start trading. This is how I do it, right? And this is how I prefer learning a new strategy. So I was looking at GBP USD. Hourly time frame. Market was creating these equal highs over here. And I was like, why is the market creating equal highs? Well, obviously the market is creating equal highs because it wants to grab the money above here, right? There's a lot of stop losses, a lot of orders, a lot of limits sitting above this resistance and these equal highs. So of course money is gonna the market is going to come grab this money. Now, we know two things. The market is creating liquidity. Second thing we know is market is going to come up and grab this liquidity. Now, we had established that. Now, what we don't know is where the market is going to come up to. Where is it potentially going to reverse from? Well, if you look to the left, this is where you start looking to the left. Now, if you really want to think deep about this, right, you would look to the left and you'd be like, why is the market creating resistance here? There's no support. There's no support in the past. There's no resistance, right? Maybe in the past, way past, like over here, this was a resistance, but not even a strong resistance. It got broken twice, and then became a support. But also, it didn't act as a support in the for the future, right? So why is the market now? I know that this is a fake resistance. If I look to the left, I see no structure. I can tell right away this is a fake structure. Now, where is the potential of the market to reverse from? So, right here, what do you guys see? This is the money box, right? This is a money box, and this is also a money box. Now, whenever there's a bigger and a smaller, if there's a smaller money box, I look at the bottom or at the start of the money box for an entry. If there's a big money box, I look at the half of the money box for an entry, right? So, if you look to the right, you go into the future, right? Look at this. Where did the market come to? It came to the money box. And the money box is where the manipulation happens. The market makers, they take the market up for a little bit. People think it's going to reverse to the upside now. It's going to be a bullish trend, and then they continue lower. So they're leaving breadcrumb trails. This is what I like to call this. They're leaving footprints that we're going to come back to this area. And then the market, and then this was not a small move, guys. This was about, if I'm correct, this was 400 plus pips, right? Yeah, 500 plus. So this was not a small move. Guys, this is why you need to train your eyes and your brain. This should be a muscle memory. Whenever you see this happening, this should be a muscle memory for you guys. So, please go ahead and watch all the videos, okay, as many times as you want to learn and grab all this knowledge and grab these concepts. Because I'm pretty sure it's going to be new to a couple of you guys. So that's it. I hope you guys learned something from this video. And if you do, please support the channel. And I'll see you guys in the next video. Peace.